All right, the Hangout on Air is live on that note. Good morning and happy Friday. So, just before going live, for the sake of the kids watching at home or watching the replay later, we started talking about, Xero and QBO, QuickBooks Online. So I had an interesting call this week because it frequently comes up in the dialogue in ABO, for example, and in other places, and just generally when I speak with people, a lot of times people will say things to the effect of, Intuit is keeping up with QuickBooks Online just because Xero is sort of forcing them to, or giving them a run for their money, or other variations on that theme. But that's essentially the message. And based on dialogue that I've had with my friends at Intuit over the years, and especially recent dialogue, they have asked me to please come to them when I get feedback along these lines, and and just in general feedback, so I can get the facts and then kind of relay that back to the rest of the world. So I did that, and I had a call with Kevin Kern, and for some reason, you know why? Stupid McAfee. Every Friday, I have to change the scan date. I just absolutely hate McAfee.
I got rid of it.
I really do. I have to switch back to AVG. AVG was so much better. It was like hassle-free. So, hang on one second. I'm going to tell you because I want to be, again, the whole idea is, and I don't know if some of you guys probably saw, a few months back, just before QuickBooks Connect, I wrote a post on my Nerd Enterprises blog where the essential topic of the post was just responsibility in journalism. Because when we're out here in social media and we're talking about these products and these companies and these apps, a lot of people say a lot of things. And unfortunately, a lot of people say a lot of things without fact-checking first. And I think it's so important because you ruin your own credibility if you go out there and make claims or statements, especially about others, when they're not factually accurate. Something like that actually came up this week, I think it was just yesterday actually, in our ABO group in Facebook. And somebody had raised the question of whether or not they should put their accounting practice or bookkeeping practice as bookkeeping in QuickBooks Online. Somebody else chimed in and made statements. They were vague statements, but as far as I could tell, my interpretation of the statement was something along the lines that this person was suggesting that the information is not safe with Intuit and with QuickBooks Online, and you're putting information about your clients in there, and that gives Intuit access, and Intuit is a competitor as much as they complement their business. And I'm reading this and going, what is this person talking about? Like, do you really think Intuit doesn't have better things to do than concern themselves with our information and our practices? They're a Fortune 500 company with $1 billion in annual sales, a ton of cash on their balance sheet. They don't need to steal our clients, I promise. So I chimed in, essentially asking for clarification and then putting in my 2 cents, and it seemed like I upset the person even further. So the point I wanted to make, though, is the conversation I had, and I'm still trying to look up who the person is. Mainly I want to get the right title. Kevin Kern has been a product manager for a long time for Intuit, pretty much since shortly after its inception, which was in 2001. The other person, hold on, I've got it, his name is, and I hope I'm pronouncing it right, Klaus Kosgaard, who's the Vice President of Experience Design for QuickBooks Online. And the essential purpose of the conversation was that I went to them and said, is this true? Can you comment on this? Is it true that, because of Xero, you guys have felt like you've had to step up your game with QuickBooks Online? I was very point blank about it with them. And I'm going to write a very detailed blog post explaining what they essentially explained to me. I'll tell you right now, I'll spoil it for you somewhat. The essence of it was, no, it has nothing to do with what the competition is doing. Sure, of course you look at your competition. That's important. You should. But their innovation is driven exclusively based on customer experience. They're looking to design something that gives the best possible experience to the customer. And I'll share this with you. I'm going to have a lot of information that they gave me that sort of serves as the proof of that. And these are facts. These are things they actually do that can be proven. So, and I'm even going to go to the extent of having them review what I've written before I publish it to make certain that it's absolutely factual. And to me, that's responsibility in journalism. That's what we need to do, because as people who have blogs and who put content out there, and I'm the first one to encourage you to do that, you'll grow your business faster and with a much better ROI for the marketing effort and expense. You'll grow it faster that way than any other way you can this day and age. Eric and I frequently have these discussions. But you have to be factually accurate if you're going to make claims and statements out there. I think it's important. It's even in a forum like our ABO group on Facebook, I think it's important because it's your reputation. If you say something that's completely fallacious, then you're going to look bad. And that's the last thing you want to do. The whole idea is social media should help you build a good, solid reputation. You know, not hurt your reputation, and it's up to you to make sure that, you know, it goes one way or the other.
Well, it seemed like at a minimum you want to own it, like this is my opinion, you know, as opposed to this is factually very, you know, empirically validatable. It's my opinion.
But it's not always clear the way people put information out there that it's opinion and not factually accurate. And I'll even argue there that your opinion should be based on fact. It should, if you have an opinion, however that opinion is formed, I think it's responsible to go to the trouble of confirming the facts that led you, or whatever you perceive to be the facts that led you to form that opinion. Yeah, I think too many opinions are formed based on my reading some comment somebody else made.
Yeah, I think
I don't know if they know what they're talking about.
I think it should be based on your experience, I mean, with the product or whatever, as opposed to what Joe Blow told me, you know.
Well, sure. Yeah, you can definitely speak to your own direct experience with a product and say, you know, I like the bank feeds better in Xero than I do in QuickBooks Online. But I also think even that should be backed up with give reasons why. Give proof that you've actually evaluated both fairly before you make a statement even like that.
Yeah.
Right? And say, here's why I like the Xero bank feeds better than QuickBooks Online. Maybe you like, you know, Xero has, aside from the standard bank feeds, they have the other screen where it's almost like a spreadsheet-like view, where you can do like bulk, you know, matching for your banking data. Maybe that's why. Maybe you like that screen better, and you think that that screen makes it much more efficient and easy for you to be able to get your banking matched up and get on to what's really important, which is analyzing that data. All right? That would be a very positive way to go about stating an opinion and supporting that opinion. So, you know, to me, that's really important. Responsibility in journalism. All right,
I want to say something else too, Seth. When you talk to your Intuit people, I remember there was someone that was head of the ProAdvisor department. Am I correct?
They have heads of every department you can imagine. It's a huge company.
Yes, I understand that. Yes. There was someone we talked to. I'm not sure if it was on your show or Stacy's show, and I can't remember his name. But he had said that he wanted. Pardon?
Chris Repetto?
Could it be Chris? Maybe it is Chris. He said that he was going to let ProAdvisors know of new things that were coming out and all of that stuff. Well, today I got an email talking about, let me see, it's called QuickBooks for Self-Employed. And they have a program for what they call self-employed. Helps make your taxes easier for your Schedule C clients. So what is included in this? If we are supposed to tell our clients about this, how comes we haven't heard anything about it yet?
I thought it was a blog.
Well, this may be them coming to you and letting you know about it, but do me a favor, forward me the email, and I'll forward it to my friends at Intuit and see what I can find out more about it. You know, one of the things that I learned, not this past July, but the one before, at the very first Intuit VIP Summit, actually I learned this directly from Kevin Kern. I had asked him a while back, like, is there any way, along these very specific lines, Gene, I asked him, is there any way you can let us know about features that you're going to be releasing in the next 6 months to a year so that we can kind of get our heads wrapped around what's coming down the pipeline and try and prepare our clients for what's coming so that when they do get released, we can already be like right on the line, ready to fire away and launch with whatever it is that they're releasing. And his response for why they can't necessarily do that made a lot of sense. But not a lot of people think this way, so we don't put it together. And the reason they can't necessarily do that too far in advance is they're a publicly traded company, which means if they put out information about something they intend to release, and take a product like QuickBooks Online that's subscription-based where people come and they pay, and it's a monthly fee, people might sign up specifically in anticipation of having that feature. And then if for some reason in beta testing something goes wrong, there's a delay, for whatever reason it doesn't get released, they would literally have to go and restate their revenues on their public financial statements, because they would have to acknowledge that they lost subscribers or that they recognized revenue on the basis of something that was supposed to happen and didn't. So there are all kinds of rules about a publicly traded company that we don't even think about that mitigate these kinds of things and what information they can and how quickly or ahead of time they can disseminate information about these things. So it may well be that this communication you received, Gina, was specifically that this is what they can tell you right now, and as they're able to release more information, they will. But I'd be happy to take what you got and, you know, run it up the flagpoles.
I'm absolutely going to send it to you. Billy Ann, who's not has her mic muted, has said that it was announced on the QB blog a few months ago.
Well, Gina, there's an app on my Android called QuickBooks Self-Employed, and you know, it might be one for the iPhone too. I don't know. It looks like it's just kind of a way for organizing things. I haven't really looked into it that much.
Well, yeah, that's what my problem is. I haven't looked into it, and I don't know what it is. I'd love to be able to promote it, but
You might look.
I don't know what it's all about. You know, I have something that says, one click or swipe with your mobile device, clients can separate business and personal spending in seconds. Oh my God! As an accountant, oh my God! Are we combining personal and business on our same checking account again, or do we need two QuickBooks accounts?
Do you have an Android or an iPhone?
I do, and I'll bet you I did download that too. I just don't use it on my.
I don't either. I mean, it's just on my phone, but it does.
Right. I just hate being caught by surprise when things like that are said.
Okay. Bye-bye.
Bye-bye.
Who's whispering?
See you later. So, who's ready for tax projections and Microsoft Excel and Qbox?
Me?
It's 8:15. Usually I allow about 15 minutes for banter, and then we get into the meat. But real quick, I wanted to go around the horn. Billy Ann, if you feel inclined, please unmute and chime in on this. It's December 19th, right? We're basically a week away from the Christmas holiday, then Christmas to New Year's. We've got just a couple weeks left in the year to run your payroll for your S-Corps and do anything else you need to do that has to be done before the 31st to make sure that your clients' books are all, you know, tight and ready for closing and then eventually filing taxes. So are we, the question is, are we kind of all done and winding down and getting ready to relax the next couple of weeks, or are we ramping up and cramming it all in before the holiday?
Oh, I'm totally cramming.
Excellent.
Cramming. Stressing.
Who else?
I'm working on it.
I'm almost done. I got one client that's a really big one that I'm at the disposal of the CPA, and they always like to wait to the very last day, and that's usually one I just kind of phone in from home. But most of my people are done. I'm done with tax planning before Christmas.
Awesome.
Congratulations, Joanne. You are the woman.
Yeah, I don't have patience for anything other than that. If they can't get it to me before then they can wait till the new year. Sorry.
Yep. Yeah.
Buy yourself a piece of equipment. The extender got passed.
A number of years ago, I worked with a guy who had a tax attorney, you know, doing all his taxes and tax planning, and the same guy put together. He was a real estate developer, so he had the same guy putting together all his agreements and whatnot. And this guy, I know he said it specifically to make a point to clients, would purposely take off just before April 15th. Like pretty much by around April 10th or 11th, he was on vacation. He didn't care. He was not dealing with people coming to him at the last minute saying, I need my taxes done. His attitude was, too bad, go find someone else, I don't have time. And you're already paying a tax attorney like this $450 an hour. So, you know, unless you want to like double that to $900, there's no way he's even going to look at you. And it's hard not to respect that, actually. I mean, I'm sure people get annoyed and frustrated when they're on the sort of receiving end of not, or well, let's just say the receiving end of not being able to get the benefit of his services when they want it. But it sends a clear message: plan ahead. Don't dump it on me and stress me out at the last minute because you didn't plan.
Exactly.
Exactly. I've been doing more hands-on with my clients and starting earlier. Actually, I would say I started in November, looking at the 1099 vendors and making sure all the information was there. I add accounts receivable. I want to look at their accounts receivable and see how many really old or over a year old payments that are still open, or invoices that are still open. So I have one client that didn't get information back to me, and like you, Joanne, if they do, they do. I'm happy. If not, I'm not going to stress over it.
Yep.
There's only so much you can do. You can ask them and ask them and ask them, but,
Yeah, this year I was pretty specific, and I always do that during, the tax deadline, too, is, I reach out to them and I said, you have until this date. And after that, you're SOL. Same thing with tax season. If I don't get your stuff for your personal return, if it's not in my office by March 15th, you can pretty much guarantee you're going on extension because I'm not stressing myself out about it.
Yeah.
You know what I did? I just completely shifted my business model away from the consulting and into video production.
That works too. Well,
Problem solved. I don't have to worry about doing people's taxes or getting them ready for it.
I think it comes down to training your clients too. You have to have a relationship with them, and you have to tell them, hey, this is coming up, and this is what you need to do to prepare for it. And when you communicate like that, they generally do respond.
Yep.
However, there are a few clients that are just in general non-responders.
Yeah. Then you just got to get rid of them.
Well, I have a rule about that too, where if I have a client who's non-responsive, I make sure that I've more than made the minimum effort, right? So I'll send emails, I'll place phone calls, I'll email to let them know I made phone calls, and at a certain point I'll say, okay, I've done all I can do, I'm moving on. And sometimes they'll come back to me and say, hey, I'm sorry, I was busy, whatever, something happened, but here I am, can we do this now? And I say, great, no problem. Every once in a while I'll get somebody coming back to me angry and saying, what the heck, why isn't this done? And I'll say, look, I emailed, I called, I sent smoke signals, and I need you to be responsive, otherwise I can't help you, And so I have no guilt about that. I make sure that I have no reason to feel any guilt about any sort of lack of effort on my part to get what I need from the client. And if they don't get me what I need, that's not my fault. I've made the effort. There's only so much I can do, right? It comes down to, on a very philosophical level, having an understanding of what you can and can't control, right? I can't control other people. I can control what I can do, and I can make sure that I've done my part. And once I know I'm satisfied that I've done my part, and I really have, and I'm not just trying to blow it off, then I'm good, and I'm not going to stress out about it. There's no reason to.
I have kind of a 3 strikes and I'm out. After 3 times I don't. I figure they're not going to respond.
Yeah, you should take away one of those strikes, Dennis. 2 strikes, babe. 2 strikes.
Yeah. I always get that client that comes back and says some kind of horrible personal thing happened to them. Somebody in their family died or something.
Yeah, I've got clients like that. I don't hear from them for a year, and they come back with all these crazy problems and preventing them from contacting me. And figure, well,
one of the best things was I had a client contact me, I don't know, I guess back in like June or July of this year, asking was I still doing his bookkeeping, and I said, well, I kind of stopped because after repeated efforts at collecting the balance you owed me, nobody responded, and I never got paid, so I stopped doing the work. And he says, well, are you still willing to do it? I said, sure, here's an invoice for $3,000, pay it, and we'll get started again. And he paid it. I said, great, good.
Yep. Yeah, I had a lady that was just like that. She, I worked my butt off, and she was always a pretty decent payer, and I waited like 2-3 months to get paid, and she finally just paid me, and she goes, now are you going to come and look at my stuff for this year, and I said, yeah, here's an invoice for $1,500. When it's paid, I'll stop by.
That's what you have to do. But I have to say, on the other end, I was sitting at my computer one night, and I got a phone call from somebody trying to do payroll, and it for real, because I saw it on the news. It was about a restaurant owner that had been shot at his restaurant. And yeah, the manager was trying to put all the pieces together for the last week that the people had worked, and there was no information, and, you know, what do you do in a case like that?
Well, you do what you can to help them with the understanding, and I'm sure they understand that they're asking for somebody's help at the last minute, and that it's out of anybody's control.
And I did, and it was probably, you know, mostly a free job. I did charge a little bit, but not nearly the amount of time that I took.
Yeah, it's one thing to help somebody who genuinely needs the help because they're in a situation that was out of their control. It's another thing to help somebody who's taking advantage of you because they were irresponsible, or for any other reason for that matter. I mean, I had a guy call me yesterday. He was referred to me by the Sleater Group. Gets on the phone, starts asking me about, essentially he needed help with QuickBooks for real estate, and they had already sent him to my subscription site for that. And so by the time he called me, he was on the site, and I was telling him about it, and I said, you have two options basically. It's $77 a month, or for $197 you get 6 months plus a one-on-one with me, and most people seem to agree that's very reasonable. And right when I get to the point of telling him the pricing, he says, "Oh, I have no money. I'm broke. I'm really looking. I need to learn this so I can provide the service to someone, but I don't have any money to pay." And I said, "Well, I've got free videos on YouTube and so on." And then I don't know this guy. I don't know anything about him. So ultimately, I said, "You know what? Let me do this." I said, "Send me your contact information. I'll get back to you within 48 hours, and I'll see what I can do to help you." And then I called the Sleater Group, and I wanted to know, do you know this guy? Is he a member of the Sleater Group? Is he a friend? Is he a guy that we know is real and sincere, or is he somebody that's maybe trying to take advantage of me? And the long and short of it was, turns out he's a real guy, just really sounds like can use some help. So I'm going to get back to him today and say, I'm going to give you a free month on the site. And then hopefully that'll be enough to get you going so you can service your client and start collecting some fees. And then if you want more help, hopefully you'll be happy to pay me for it at that point. That's what we do. We always look to help people. I think that has to be first and foremost, but we have to be clear about when and where we're being taken advantage of or sort of pushed around by somebody, and that's where the line is. And we have to find that line, and sometimes it's hard to find. So we just have to use our best judgment. Mm-hmm. Anyway, it's almost 8:30. I want to get into the meat of it. I want to talk about what tax projections Microsoft Excel and Qbox have in common. So we've all seen Qbox on this Hangout. I had Chris Wise from there. A lot of us are using it now. I know Sarah has become a real fan of the product. So have I. Who else is using Qbox right now?
I'm using it with about 5 clients.
Okay. Mariette started using it thanks to me.
Yes, thanks. I know. I felt a little embarrassed since you talk about it so much, but thanks for sharing. I was forced to learn it. It was great.
And it's not real. There's not a big learning curve with it, as I'm sure you experienced. So the thing with Qbox is most of us learned about it in the context of sharing QuickBooks files. But guess what? You can also share Office documents. So in last week's Hangout, I started developing a template for doing tax projections, and then both Chris and Mariette had offered to collaborate with me on it. So I said, let me stick the Excel file in a Qbox folder and share it. And that's what we did. And the beautiful thing about it, as those of you who have used Qbox know, is it lets you know when the file is locked because somebody's in it, so you don't get a conflict. And that's what we did. We were able to collaborate. I don't know if Chris had, I think Chris said and Chris, it looks like you might be muted, so feel free to unmute. But I think Chris had a look at it, but maybe didn't make any changes. Mariette made some great comments on it. So we're going to start there, and I'm going to open it up. And first I'm going to check. Right, I'm going to bring it on screen. I'm going to try and be careful not to show you the folders list because I've got clients in there. But so here it is, and sure enough, I can see that it's not being locked by anyone. So I'm going to open up the Excel file. So Qbox is great for Office documents. That's why I wanted to bring this up and sort of put it in the title of today's Hangout, is to make the point that we have yet another use case for Qbox that was really handy. See, and look, Qbox even is now coming up and letting me know that the tax projections has been locked, right? So after making changes, I can release it. So if you remember from last week, those of you who were with us or maybe watched it later, we started developing this template here. And we looked at the S-Corp, using the S-Corp as the example, and we looked at the personal side. What I did after that was I started breaking it out and creating tabs. So I created the Assumptions tab. And, of course, I had to brand it properly for School of Bookkeeping.
Are you going to share your screen?
Oh, God, I'm so sorry. I thought I was.
I'm the only one that's brave enough to speak up.
I was so excited that I forgot to do that.
Everyone else is looking at the squirrels outside their window.
I thought you were hiding the clients. That's what I was doing. I thought you were doing your due diligence.
All right, let's try this again.
Thank you.
Starting over. So here's Qbox. Now you can see that it is locked by me, but I just closed the Excel file. So it's going to sync up in just a minute. And then it'll be released.
I have a question on Qbox. You have to physically get out of QuickBooks in order for it to be unlocked, because I've got, on some of my clients, it seems like it's always being locked.
Yeah, you have to. I mean, you have to. Yeah, you have to. If you're in the file, it's going to be locked. The only way it can unlock is you get out of the file.
So basically, you have to close down the file.
You have to close QuickBooks or close out of that company.
Okay.
And the other thing to keep in mind is.
Yeah, at the end of the day, to close your QuickBooks anyway.
Yeah,
Okay,
and not
so
only that, but remember to give it time to sync up, because if you close QuickBooks and then shut your computer down and it's not synced up, it's still going to be locked until it has a chance to fully sync up. Because it's not like Dropbox, where the minute I let go and unlock it, it's going to start syncing and it doesn't really do anything or tell anybody. It's going to keep that file locked until it knows it's had a chance to sync your changes up to the web, and then in turn drop those changes down on anybody else that it's shared with.
Okay, so basically, if the client has been working in QuickBooks, they go to lunch, they leave their machine on, and QuickBooks is still up and running, then it's locked. Is that right?
Well, I mean, yeah, it's common sense. You know, Qbox has no way of knowing that person went to lunch and that they're done working on the file. The only way Qbox knows you're done is you've actually closed it, right?
Okay.
So, you know, it's a lot of this is just, and it's the same thing with Dropbox. This is why I always, you know, I struggle sometimes wondering why people don't understand why they get conflicting copies of the Dropbox. It's not, you know, it's just common sense. You have to think in terms of the fact that this data needs to get synced from your computer up to the web, and then from the web back down to anybody else it's shared with. So until somebody closes out of it, that permission is going to be locked.
Okay.
So absolutely. All right. So now we've got the it's now been released, and the fact that it's no longer locked means not only has it uploaded to the Qbox server, but it is also now downloaded back to Mariette as well as Chris. So I'm going to double-click it here to open it. And see, it says it's locked. It immediately locks it. I'm sure Mariette shows the same thing on her side, and Chris shows it on hers as well. And Qbox lets me know, okay, it's been locked. Go away. And so here's the original worksheet from last week.
Mm-hmm.
And from this, I started developing, you know, this was just kind of what I thought of as a rough sketch that we were putting together while we were just talking out loud. So then I went on my own and I started creating the Assumptions tab. The Assumptions is where you kind of set your variables, right? What things are going to be used in calculations that's going to change the other numbers that are involved in this. And this is going to be expanded. All I've done so far is the S-Corp side of it. I haven't really gotten to the personal part of it yet. But what I did was I did this in Qbox and synced it up so that Mariette was able to get in here and make these comments that you see. So the first thing she brings up is on the payroll withholding percentage, and this is the assumption about how much is going to be withheld from payroll. I just put a flat 30%. So Mariette says, should we specify that these are federal and state income taxes withholdings? That way this field can be updated per tax situation. So just for clarification, Mariette, are we talking about breaking this up into two different assumptions, one for federal and one for state, or just updating the description?
Either way, I guess I would think it would be nice to have two separate fields there because, like I gave a couple examples, depending on each situation, they can, you know, increase their tax rates. They can say they're in a state with no state tax, any other special scenarios. So I think it'd be nice to have it separate.
Your which?
And by the way, I didn't know you were going to put these comments live, so forgive any misspellings.
Oh, sorry. I didn't mean to embarrass you. I'm sure it's perfect.
Okay.
We won't hold it against you.
Okay, please. That was my disclosure. If anybody watches this.
So what I'm thinking though is either way, however we decide we want to break it up, federal versus state, it's still going to get added together, and that total percentage is going to be used to withhold. So I can still use the same variable here. So this way you get to kind of lay it out. So let's say the state is 20%, or the federal would be 20%, and the state is 10.
Right.
Okay, and then this is again the beautiful thing about using range names is, notice up here at the top where it gives me the reference that I'm in, it still shows me that this is, I haven't upset the range name, which means the formula hasn't been upset. All I've done is change this so that rather than be a hard-coded number, this is now a formula based on the sum of these two items. So, and if you notice what I start doing when I develop the template is I like to color code things so that it hopefully makes it clear. Somebody's echoing. But hopefully it makes it clear which things can be entered and which things are calculated. So what I might do on something like this is just, I can actually copy this green. And if you want to copy, because I don't remember exactly where I got this color from the color palette, I just select a cell that's got the color I want. And over here it comes up then in recent colors. So I select it, and now it updates it as the last color that was used. I can come in here and click on that, and boom. So now that kind of distinguishes this as something that's not necessarily going to be entered. And then the other thing I'll do is I'll make the font white, because that's kind of been my standard convention here. So anything that's, oh, shut up, McAfee. I hate you. Just kidding. Anyway, so that's kind of the deal there. And then what I can do is I can do the same thing on the description, just so it's very clear, you know, again, the distinction between what's being calculated and what is being entered. And then let's just do that for good measure. So because these are also kind of now tied in as one unit, I like to have them in their own separate little group over here. And I really don't need to probably do the Social Security and Medicare rate as an assumption. As long as I've been alive, I don't think it's changed, but you never know. So
I agree.
So all right, so now I can hide this comment. Because we're done. And let's look at the next one. So the max contributions, I actually think I already updated this. So now it's the dollar max is $52,000, and it's still the lesser of 25% of payroll or that. So that the 25% hasn't changed. So I think I had originally put like 45,000 in there, which may be what it was like a few years ago. And then what this does is it tells you if you want to max out that to the 52,000, then you have to pay 208,000 in salaries before year end. So this helps you do the planning because you can look at what the officer's payroll is so far this year, and if your intention is to max out the SEP IRA contribution, then obviously you just take the difference between any payroll they've been paid year to date and this 208,000, and that's the payroll you want to run for year end to make sure you can max out. All right, so Marriott says it's still 25% of gross, not net. So for example, 250,000. Due to the max, 208 is where you're capped off, so you're still only going to be able to deduct the 52,000, not the 62,500, which would be 25% of the 250,000. So again, it's the lesser of the most you can contribute in dollars is 52,000, or 25% of what you've actually paid. For sole proprietors, compensation is your net earnings from self-employment, which takes into account 1, your deductible part of your self-employment tax, 2, deduction for contributions to your own SEP IRA. All right, so Marriott, help me make sure I understand this correctly. What we're saying is for sole proprietors, it's not based on payroll, it's based on the Schedule C net income?
Yes, that's correct. And I kind of went a little bit in depth because of us when you asked me the question. So I just kind of gave you some examples, but yeah, for a sole prop, it's their net earnings, but then you have to pull out the self-employment tax and you have to pull out their deduction. So it's really like an adjusted net earnings number. I don't think we really need to incorporate that into this spreadsheet, but it's more like, for an example, if a sole prop was using the spreadsheet, how they would need to calculate the number in regards to specifically just the SEP IRA. That's it.
Got it. Perfect.
Yeah. So we can clean that up a little more. That was just for me and you, but obviously the example will be more detailed if someone's using the spreadsheet and wants to understand the difference on the calculation.
Right. I got you. No, that's great information. Thank you. Okay. Next, I created the data entry tab. So this is the idea here is you're going to enter the sort of critical information from the S Corp P&L, right? So you're going to enter what's the S Corp net income as of right now. Any year-to-date officer salaries. I was just sort of going with the assumption that in a lot of cases it's going to be 0, right? Because I know with my S Corps a lot of times we don't pay any salaries till Q4, at which point we just analyze the net income and we make that determination then. And we talked about that a little bit last week. Did you need to do it throughout the year or not? And my understanding has always been, and I think this was essentially confirmed, is that as long as you do it from payroll, you're not subject to penalties, even though it wasn't paid in evenly throughout the year. So that you can wait. I think Chris might have expressed that she had concerns about having clients do that it could come back to bite you. Or somebody I seem to remember saying that it could come back to bite you if you do that consistently every year. I've done it consistently for clients every year, and I'm not aware of anybody having any trouble with that. Again, my understanding is as long as it's done through payroll, so that the withholdings are taken out and taxes are paid in through a payroll process, then you're covered and you're penalty free. And then we look at the shareholder info. What are the shareholder distributions year to date, and what was last year's tax liability? And that really is getting into the personal side of it, because this is so that we can analyze what that minimum taxes that need to be paid in has to be based on last week we discussed, setting that threshold at 110%. So that assumption about what that threshold is going to be put back into the assumptions tab once I finish building out the personal side of this.
Right.
And then we get into the actual S Corp. So all of this is pretty much flowed over by formula, but again, I've coded things that can be entered, right? So here's where, this could go into the assumptions, but I thought it was better placed here because here's where you're going to get to do the analysis and make the decision about how much more salary should be paid. So that's why I put this here. So this is additional salaries to be paid before year end. And then pretty much everything else is calculated. But then as we discussed, and Mariette brought this up last week, in this section here, we want to put any other things that we can do to try and get additional deductions on the books before year end. So if we know they have cash and they have a need to buy equipment and we're looking for some extra deductions, we can say, look, buy the equipment before December 31st because then we can take Section 179 and fully depreciate it for this year, and that way we can take advantage of a deduction that we can use this year rather than wait to get it next year. So that's the thinking behind having this section here, and I made it look a little different than this typical because I wanted it to sort of stand out as sort of like a worksheet where you can play around and see what the impact is. And then of course, so the assumption is, and we put it in the description here, all right, new assets that we're going to take Section 179 for. So if I add this $12,000 in as another deduction, then it reduces my projected net income. So this projected net income, of course, is a function of what we're starting with as the S Corp net income, right? Minus any salaries, both year to date plus what I'm projecting to pay additionally, the taxes that are related to that, and then this just calculates the withholdings. That's not factored into the net income, of course, and and then of course the contribution that we're going to do. So right now this is the SEP IRA contribution is. This is just showing us the max allowed. So this should be updated though for the 52,000. So this is taking, it's 25,000 because it's 25% of the 100. That's why it's not maxed, because it's the lesser of. And right now our officer salaries total is $100,000. So if I jack this up to 250, you'll see that it's not working because I need to tweak the formula to take the lesser of. So I'll show you how to do this actually, because this might be interesting for you guys to learn. So what we need to do here is we need to make a decision. if the result of this calculation here is greater than, go back to the assumptions, this 52,000 number that we've put here, and for that matter, whatever number we ever put in here, then we want to stop it at 52,000. Otherwise, do the calculation of 25% of the salaries. So that's the sort of plain English version of the formula that we have to write. So how do we do that? I'm going to take this whole calculation, highlight it, and press Control-C. Everybody sees where I am up at the top in the formula bar?
Yep.
Okay, so I'm copying this whole expression because this is the expression whose result I want to test. Right? I want to test the result of this whole expression. So equals if, and I'm wrapping this in parentheses, if this whole expression is greater than, and I'll just come over here to the assumptions and click on this, if it's greater than assumption C20, then make it equal assumption C20. So I hit a comma and then I clicked it again. So if it's greater than this, make it equal to that. Otherwise, and now I'm going to press Control-V to paste that expression in, because otherwise, do the calculation.
Cool.
And then I close parentheses. So it's if-then logic, right? If this is true, then do this. Otherwise, do that. And now it comes up with the right result. And notice, even though I've got 250, it comes up with the 52,000. If I go back to 100, then I get back to my 25,000, which of course is the 25%. And whenever you write a formula like that, always check by playing around. The philosophy should be, I want to make this formula crash. If I know that I've done everything possible to make the formula not work and it still works, then I'm good. This is a pretty simple example as formulas go, but I've written some doozies in the past that I really had to play around and test every possible scenario, because I have to almost assume that somebody who's going to be using this is going to be looking for ways to crash it and make sure that they can't. Moving right along. So now we just do a little recap. Shareholder distributions is the year-to-date we said was 100,000. That comes over from here on assumptions, or rather on data entry, sorry. So the year-to-date distributions we said was 100,000. So on the analysis we're looking at that, but then the offset from the net payroll check based on the additional salaries we're going to pay reduces that amount. So we're going to wind up, assuming we pay the salary that we're proposing up above, we're going to wind up with shareholder distributions of $37,650. And then let me see what Mariette's comment is. Says this may be a good place for a note about basis. Okay, do you want to write that note for me? I can write it. And also, Mariette notice said that she loves this section. Thank you.
I would love to write that note, and I think there's someone else in this call, I won't say his name, that's pretty passionate about it. Maybe we can get together and write it together. So okay. I'll leave that open if anyone else wants to do it.
Well, considering you said his, and I'm the only other guy here, I think that narrows it down.
I think there's another, isn't there another male on the call? Based on the picture?
Nope.
No?
Just me and Dennis.
Okay. And if it's not you, who is it? I'm just kidding.
All right, and let me go back because I sort of glossed over the comments. So I would specify payroll, taxes, or Social Security and Medicare. So, but this says Social Security, Medicare, taxes on payroll, or did I make that change after you made that comment?
You made the change after I made the comment.
Okay.
Yeah, so you can delete the comment, yeah.
And then, so this is withholdings, additional salaries to be paid. So is this coming from assumptions tab? If yes, should we specify? Okay, so this goes back to, the comment we had on the assumptions tab. So what I can do is I can break this out and show the two pieces that add up to this. So let's do that real quick. And then what I'm going to do, because I'm lazy, is I'm going to copy these descriptions because I know where they're coming from. And now I'm just going to paste the values of those and then tweak them. So I'm just going to call this federal payroll withholdings. So I'm just going to get the percentage out of there. And state payroll withholdings. So equals, the additional salaries, right, times, let's go over to assumptions and click on federal withholding percentage. And then the 100,000 is on row 5. Let's hold that constant by putting a $ in front of it. That way I can just copy it down, and then this becomes the sum of those two. And then again, I want to section that off so it's clear that they're kind of related and that this is a total. Now the black border doesn't show up so well against the green, so this is a design thing. Control and the number 1. Let's go to borders. Let's choose white and just click outline. It's a little hard when you're dealing with the white color because the sample is white, so you can't really see it, but rest assured it's there. You click OK, and now you can see my white border. And then Control Y will do the same thing again until I do something else. That way it's kind of clear, I think, that we're getting... You know, it's funny, every time I look over at the bottom of my screen, it looks like Joanne is raising her hand like she has a question because her thumbnail is up there. I keep wanting to stop and say, Joanne, you have a question? All right, so we've got the total there. So and then we just figure the net check based on the gross payroll minus the payroll taxes minus the withholdings, right? So that's how we get our 62,350. This is total officer salaries. It's the same right now because the assumption was that there were no year-to-date salaries. Otherwise, this would show the grand total of the two. And that, of course, is, again, what gets used in this calculation on the max Sapphire allowed. Okay, and then last comment from Mariette. She says, I like your note about 25K getting contributed with extension. Maybe you can do a recalc with 25K out so they can see how much they actually need by 12/31. So, okay, so just to clarify what this means, I included the Sapphire contribution in the cash requirements, but then I put this note here because the reality is if I file an extension, I don't have to make that contribution until the return gets filed, you know, later that year in September, let's say. So I made the point that this may not be... God, I'm going to kill McAfee. I made this note to make the point that, you know, the cash requirement really may be less. So Mariette brings the point that we can... So you know what I can do? Let's carve this out. I highlight the whole row, Control X. Shift spacebar to highlight a row down here. Control Shift plus sign. Inserts cut cells. So the other way to do that would have been to highlight the whole row. Right? Control X to cut. I can right-click here and insert cut cells. And of course, all these kind of little keyboard shortcuts, I go over in our Mastering Excel for Accounting Pros course in schoolofbookkeeping.com. So there's my shameless plug for the day. So this is the cash requirement that has to be met before year end. And then we'll total that up. We'll just call this grand total cash requirement. We'll take you and copy the formatting down. And you know what? While we're at it, let's be consistent and use that up here. I like that. Okay, also when I calculate total cash requirements, either on the personal or on a separate final tab, I think the two scenarios would be nice to see. So, mission accomplished? Mission accomplished. We can hide that. I'm leaving this up because we still need the note about basis. Okay, and we've taken care of this now. So that, I think, sort of substantially completes the S-Corp side of this. So now I just have to do the personal side, which I don't have time to do in the next 8 minutes of this session. But anybody have any questions, comments, thoughts, reactions?
I think I would play with it more, just because looking at it, it looks like we've brought the net income down to 5,350, but yet we're saying the distributions are 37,000. So I think, in my opinion, just my opinion, I would take less salary so that he has more net income so that he can justify taking the distributions, since we're moving the numbers.
Sure, sure. And let's face it, in reality, if they were looking at this potential net income, I mean, I made these numbers up, of course. So if we wanted to bring this down to something that's more consistent with the likely reality, there probably wouldn't be 100,000 in distributions year to date. In fact, what I did here was I said, let me assume 100,000 in distributions, and that way we'll pay 100,000 in salary to offset that. But I think your point is very valid.
No, hang on, because up at the top you've got the S-corp net income at 150. So if it really was 150, it is reasonable that he could have taken 100 based on those. So I'm saying I would much rather have a higher net income so that you can justify a certain percentage of payroll and a certain percentage of distributions.
But I thought that we want to, if anything, possibly even zero out the distributions, because for an S-corp, the IRS doesn't like seeing distributions. They want it all taken out in officer salaries, no?
I disagree. I mean, yes, they want you to take a reasonable salary and a reasonable one. But if you do have profits at the end of the year, that gives you basis, which you are allowed to take.
Mm-hmm. Okay.
So I think it's a preference.
So just, and that, you know, where the realm that you're taking us into now, Chris, is really sort of the whole point of this, is to be able to look at this and say, okay, you know what, Chris has a great point. Maybe we should only pay 50,000 in salaries. So then, and also it sounds like maybe it would be useful to add something in here, Chris, that does the quick analysis. It says, here's the net income, here's the salaries paid, here's the distributions, and then kind of show the percentages.
That sounds good.
I would think you'd have a better chance of defending it in an audit if you've got a systematic approach to how you figure it out rather than just sort of grabbing a number out of the air.
Which again goes to the point of having the percentages laid out, because we could say that our goal was to achieve a certain percentage, right?
I agree.
Mariette, what do you think?
I think that this goes back to us having a basis calculation on here, because I had a lot to do with that. And so I think that just goes really, it just closely relates to the fact that, you know, basis and net income and whether or not you, I think the position on whether you want to zero out your profit or not, that's a position. But I think if you can visually see everything, you're just going to make a better decision with your client.
Got it. Okay, so let me make a note here. So, and just so I'm clear, because this is where it goes above my pay grade, if I want to lay this out and look at the ratio, I want to look at the ratio of salaries to net income and of distributions to net income. So net income is the denominator?
Well, it's going to be, what was her point before? I think she was saying salaries to net income, but it's really distributions. Let me think this through real quick. It's distributions to. I'm trying to look at your spreadsheet at the same time while I'm thinking this through.
If his projected net income was $5,000,
basis, that's what I was thinking.
37 in distribution, it's going to give him. Let's just say he had zero basis. It's going to give him zero basis. So I would rather have a higher net income if I'm going to say he took distributions, because I'm saying he has basis net income to take those distributions.
But you're validating basis with distributions.
Net income.
Right, but you want net income so you can have a higher basis.
There you go. Yes.
Right? Yeah, that's what I'm saying. So you're trying to keep net income so he can increase his basis, because net income increases basis, where Seth and I were saying, you know, there's a position where you're going to basically, you know, bonus yourself out to have no more net income, but then your concern is, well, I want to make sure he continues to have basis.
To take the distributions, because the distributions are going to reduce my base.
Right, so that's why I'm saying if you can visually see the basis while you're doing this, you're confirming that you still can take enough distribution.
So where's my denominator in this? If I want to figure out, if I want to put percentages up here so we can look at the ratio, what do I do? Do I just divide each by the net income to see what the ratio of salaries and distributions are to net income? What's my denominator?
I don't have an answer. I don't know.
So we're trying to figure out if we have enough bases to take out. Wait, say that again. I'm confused on what you're trying to figure out here.
How about this? Let me lay it out like this, and we can see what it looks like. So if I look at it this way, the salaries plus my distributions are really the total that I've taken out of the business, right?
Right.
In the current year. So if I think of that as the denominator, then I can get some percentages that way.
But I think what we want to see here, I think what she's referring to is what the basis is, and even if we leave a little net income in there, that obviously will increase the current year basis, and then compare that basis with the distributions. Is that what you're saying?
No, I think what I'm saying is if I'm going to take $100,000 out of my company, I want to take a certain percentage in payroll and a certain percentage out of distributions. So
Okay,
I have to have
then this is your answer here.
to take the distributions.
Then this is your answer here, because this analysis is saying, all right, 42% of what we've taken out was taken out in salaries, 57% was taken out in distributions. And so maybe we would look at this and say, okay, we probably need to take out a little, because I'm assuming it's better to take more out in salaries than distributions, or is that not necessary?
I would have reversed that.
Yes, I agree with that too.
I would have had it the other way around.
You would have had what the other way around?
Higher salary.
My percentages.
Okay, so then we go back, and now that we can see that, we go, okay, let's do 75,000. But now it's basically 60-40 salaries and distributions.
See, and I feel better that way. Do we have net income to justify the basis? The distributions? I can't see it. On our net income.
So it's almost like you want to see like pre-adjusted net income before doing this calculation of salaries.
Well, or the idea is, like we discussed initially, Mariette, is to play around with the scenarios so that we can put the numbers in, see what we think we want to do, see how this comes out and everything else, and then look at the personal side, which is what I'll do hopefully in the next couple of days. And that way we can look at the whole picture and see what's, and ultimately we want to look at what are they going to owe to the government at the end of the day, and what can we do to minimize that without upsetting the IRS. We want to see how far can we push the line without crossing over it.
Right. Right.
So I think the common denominator is the profit before this entire calculation. Wouldn't it be? Because before you actually start, bonusing yourself out, you have to see what you have to work with.
I think it's after, because what we want to say is now that we've decided on a salary amount, what will that result look like in terms of salaries versus distributions? Because then we can tweak the salaries like we just did, right? Like a minute ago I had it at 50,000 and we had more distributions than salaries percentage-wise, so we wanted to flip that, so we increased the salary.
Right. And did your net income change when you did those changes? The one right here that we can see under the ratio analysis?
Yeah, this is the net income after everything, so it must have. Let me go back and double check. So this is at 38,512 now. If I go back to 50,000, I'm sure it's going to be higher. Yep.
Okay.
Yeah, that looks good.
Yeah, because that net income is just a recap of what's here, which is, factoring this in, of course.
Right.
So yeah, this way we can play around with this, and the goal here is to make sure we feel we're going to keep the IRS happy.
Mm-hmm.
And then when I finish the template, the next step is going to be to go over to the personal side and make sure we're going to keep the client happy as far as how much taxes they're going to have to pay.
Right.
Now their income is going to be a function of this net income plus these total salaries.
Hey, Seth?
Yes, sir.
Are we ignoring a very important point? I mean, if we're taking all of our money out, what's going to do to our cash flow and paying bills and that kind of stuff?
Well, no, because remember we have already analyzed this in terms of what the cash contribution is going to be. We're not paying out the whole $75,000. We're just paying the taxes. That's the whole point of the calculation I've got up here where we're going to zero out the net track to offset the distributions, so that the idea is to not hurt our cash flow as much as we can avoid it. But also that's part of this analysis is to say, because I had years where I was told, Seth, you should run $100,000 salary at year end based on what I had earned, and I hadn't paid any salaries yet. I said, $100,000 salary is going to be a cash requirement of 30 grand, let's just say, for taxes and everything, and I don't have 30 grand. So he said, all right, just run payroll for as close as you can come, and I had to play around with, what I did was I backed into it and say, here's what I feel like I can afford to have taken out of my account this month, and I grossed it up based on that to see what the gross salaries would look like.
Well, it would seem like you'd want to figure out a necessary cash balance to handle projected expenses over the next several months, and then, subtract that out from your calculations before you start figuring out how much you can take out in distributions. I've got a client right now. He's taking out all of his money in distributions. He doesn't have hardly any working capital, if any.
Dennis, in this scenario, he's already taken out the $100,000 all through the year. So we're at the end of the year. He's already taken the $100,000. We're trying to appease the IRS and account for it properly.
Okay, so you've sort of baked it into the assumptions.
Yeah, and the other thing is, Chris is right, Dennis. So maybe that's what was missing, is that we're assuming that these are the distributions they took out all year long. Now, the other thing, Dennis, is when I have a client like you just described, where they're not frugal with their money, then I don't wait till year end. I make them pay themselves salaries throughout the year because of exactly that problem, is they're not going to have the money to run the big payroll at year end. So this strategy only works with somebody who's frugal and keeps cash in the bank and doesn't spend like a drunken sailor. And believe me, I have those clients.
In regards to that, that's actually a good point. Maybe it wasn't clear when you're looking at it on the screen, and maybe it can be a different color. We actually have the cash requirements because we talked about this last week. Remember, Seth, that that we want to make sure that people that use this template understand that this is not copying out all of it, just the cash requirements. So maybe we can have that in a different color, or just kind of have it pop out a little differently, so they know what is the true cash requirement at the end of the day.
Yep. So that's what this is. So this is the cash requirement that we're going to need before year end, plus the SEP IRA contribution, which is basically going to add to that, or probably be made separately. So we'll pay the 28 grand to get the payroll done, and then this will have to be saved between January and September. We'll just go on extension if they don't have the money to pay it now. But so I'm sorry. So what was I guess the point is that we need to make it clear in the description. Well, this does say shareholder distributions year to date. So doesn't that make it implicit that this is money that was taken out throughout the year?
No, I'm talking more on the cash requirement, on that section you were just looking at. Maybe like how you did on the one before where you had it the section I said I loved, and it was like in white and it looked just differently, like it visually looked differently. Like maybe that little area under cash requirements, we can make it look different so it just pops out a little bit more. Because I think the green, I kind of get lost in where it is with the color.
So watch this trick. This is an Excel formatting trick. So the way you do that, because everything is made green, all I have to do is say no fill and then change the font.
Oh, that's cool.
I learned that trick a long time ago because I was actually looking at the Microsoft Office templates that they provide, and I noticed that certain things would kind of draw my eyes to them. It would get my attention, and eventually I stopped and asked myself, well, what is it about this that gets my attention? And I realized what it was is they had started their canvas, so to speak, with a shade that's filled in, and then you just remove it, and that has a way of highlighting, something like this.
I like that. The other thing that we had talked about, and I think this we'll deal with it when we close the entire template up, is that we're just looking at the cash requirements on the S-Corp side, but ultimately, like during a tax planning meeting, you're looking at the cash requirements on both the S-Corp and personal side. So I think on our original worksheet, we had like a total cash requirements, So that would be something that, you know, they'll have to understand too, that there's a potential of paying a lot more than just the amount we calculated.
Right, because then on the personal side, we're going to look at, well, that's what's going to happen. On the personal side, we're going to look at the total income, which is going to be the net income plus the salaries. And based on that, we're going to come up with what a projected tax liability is going to look like, subtract from that the withholdings that were taken from the salaries, and then see what that looks like. So, yeah, you're right. That way we're saying this is the additional amount you're going to owe once we file or file an extension come March or April, depending on, well, for personal, it's going to be April, but.
And a lovely planning tool to say, hey, let's start taking a salary monthly.
Yeah.
Right. Yeah, and sometimes it might be an issue of showing them something like this to get them to, you know, be struck with reality. That's been my experience with a lot of clients is when you hit them overhead with reality by forcing them to actually look at the numbers, which is something they often don't want to do, all of a sudden they get very motivated to start being more proactive about things like this. And with that, we started late, so I went late. But any parting words or comments from anyone?
Are you going to be selling this in your store?
I haven't decided yet. We're definitely going to put it in schoolofbookkeeping.com. My first thought was to put it, you know, make it free for any students, but it's Mariette's fault. She convinced me that it was worth more. So I'm toying with the idea of charging additional for it, but maybe not. I hate the idea of charging anything additional to anybody who's already a subscriber at the school. What I may do is actually, charge for it for somebody who wants to buy it and doesn't want to become a student.
Yeah,
but
that'd be good.
I'll probably charge more than a subscription would cost for a month. So, because Mariette told me this was an incredibly valuable tool that was worth thousands of dollars.
It is for me. It's for me. That's funny.
So, no, my inclination is to stick it in schoolofbookkeeping.com in the Excel templates area. I will do a video, kind of walking through it and explaining how everything works, and probably even embed the last 2 weeks Hangout videos so people can even get some insight into what we've gone over as far as what went into the creation of it. Because it might actually help people appreciate how much work does actually go into creating something like this. This is a lot of work. I sat last Saturday night at a fundraiser event for a nonprofit that I'm the treasurer for, and I worked on this template in between collecting people's money who wanted to pay to come into this fundraiser. So it was that's how it got done.
Kind of shows you the value of collaboration too.
Exactly. No, and that's why I wanted to bring up the Qbox thing. Is it's such a cool app for stuff like this where we're able to work together on it. So. On that note, I'm going to close down. We'll sync up, and we'll see you all next week. Gina's Hangout, I believe, is happening later today, 2:30 Pacific, 5:30 Eastern. So don't miss that, because it's going to be awesome. I don't know what she's going to be talking about, but I know it's going to be awesome.
Okay.
And I have to go do a one-on-one remote session with somebody who may even be calling me right now, wondering where I am. I'll see you.
Okay, take care. Bye-bye.